Remind everybody, if you have questions, go ahead and put them in the chat or hold them till the end and then put them in the chat. We'll let everyone present first so we can get through. They'll present for about 20 minutes and then we'll have the questions answered at the end because there are a lot of questions. And as I've learned through all of this, some questions might not be able to be answered, honestly, because this is such a moving target and there's a lot of information that continues coming out. I'll probably, Mary, she'll probably get a text from the SBDC during the presentation with an update. So things continue to change. I would like to thank my staff. They've done a great job kicking off the new year. Kim Euler, Jennifer Dickens, and Nora Stafford, thank you guys for all of your help behind the scenes and keeping the chamber moving forward. So with that, our first presentation will be with Frederick Zink and Associates, John Lopez and Casey Lynch. So with that, I will go ahead and mute and we'll kick off today's presentation. And again, thank you everybody for being here and to our presenters. John, Casey, you're up.
Okay, can everyone see that? Okay. I'm John Lopez with Frederick Zink and Associates, and we're going to talk about CARES Act. PPP2, not the CARES Act. So back in March of 2020, Congress enacted the CARES Act, which started the whole payroll protection program. That program expired back on August 8th of 2020. So if y'all been keeping up with the news, most recently at the end of December, they passed, it's a tongue twister, Economic Aid to Hard-Hit Small Businesses, Nonprofits, and Venues Act. So we're going to call that PPP2 to make it easy. So with that, they made a lot of updates to the original PPP1 and made a lot of changes for forgiveness. So let's go start about PPP2, the second draw. So the big, you have to have 60% of payroll to be covered. Many of the requirements are the same. The new maximum amount of the loan is $2 million, still based on 2.5 times your monthly payroll. But the difference for this one is now restaurants and accommodation sectors, they can get up to 3.5 times their monthly payroll instead of 2.5 times. They also expanded the eligibility to the 501c6s, whereas before only 501c3s could participate. You are eligible to get a second PPP2 loan if you've already received your first loan, and you're going to use or will use that amount up before you get dispersed for your second loan. Another change that was made, the limit is 300 employees or less, whereas in the first round, it was 500 employees or less. And the biggest change for the round 2 PPP2 is you have to show a 25% reduction in gross receipts for a quarter in 2020 compared to the same quarter in 2019. Another change that also is in there is that now more farmers and ranchers may be eligible. In the prior guidance, it was based on the net income, whereas now that is based on your gross receipts. So that's a change there. You still have to certify that you needed the loan because of the economic uncertainty. And one of the biggies is that the expenses that are used for forgiveness are now tax deductible, because that was a big unknown back then. Originally, they said that the loan wasn't taxable, but conversely, the IRS came out with guidance stating that since the loan was tax deductible, not taxable, then the expenses were not tax deductible. This changes all that, and now those expenses are totally deductible. You have until March 31st to apply for round 2 of PPP2. And if you didn't apply for round 1, they opened it up early January, and you can still apply for round 1 under the old guidance. And you also have till March 31st to get that loan. We have, oops, too far, the loan forgiveness. So what we're suggesting is you go ahead and wait to apply for forgiveness. A lot of people already applied early, and then the rules changed on them. So we have 10 months after your covered period ends to ask. So that being said, one of the other changes was your covered period. In the original act, the covered period, you had an either or choice. You either had 8 weeks. PPP2, you have between 8 through 24 weeks. So if you're covered, let's say you had payroll and you only needed 17 weeks of payroll to meet your forgiveness. In the old rules, you had to submit all 24 weeks of payroll. New rules, you can cut it off at week 17 for forgiveness. And that's important because one of the other changes they did is that old rules, if I had a PPP loan, I couldn't take advantage of the employee retention credit. They have now made that retroactive that you can take advantage of that employee retention credit, even if you had a PPP loan. The only difference is you can't use the same payroll for the loan forgiveness as you do for the retention credit. Casey's going to talk more about that in just a little bit here. Oops, I changed the slide too quick. Also added our new non-payroll costs. For instance, we now can ask for forgiveness for operation expenditures, software, computing, processing of payroll, uninsured property damages, all the damage that was caused by a lot of the looting and vandalism that occurred during 2020. Now you can apply for forgiveness for supplier costs, costs essential for keeping your business open. Your PPE, your worker protection expenditures, anything you needed to incur as a result of complying with all the COVID regulations. And they clarified the payroll costs. Now you can include group life, disability, vision, and dental. So if you have not, sorry guys, if you have not received forgiveness on PPP1, now those costs can be included in that application for forgiveness. Another thing that they enacted for round 2 was a simplified forgiveness program for those loans $150,000 or less. It's pretty much a one-page form, and then Colorado folks are going to talk about that in more detail. So that being said, when I spoke about the employee retention credit, it's pretty much a credit of about $5,000 per employee, and it's a refundable credit for 2020. And for 2021, it's a $7,000 credit per employee per quarter. So Casey's going to dive into a little more detail on that and how that works in relation to the PPP2. Let me get to that slide for you, Casey. There you go.
Thanks, John. Casey Lynch with Frederick Zink. I wanted to follow up on a couple of things that John talked about too. It's very confusing at this point. There's a lot of different rules for a lot of different periods, and we don't have all the answers. And so we want to take a look at that. And stuff that happened in 2020 had a set of rules, and now they've changed the rules for 2020. And then we have a whole new set of rules for 2021. And part of this is PPP1. Those rules have changed. And if you didn't do PPP1, again, you can still do that. And new rules apply if you do it now. And the employee retention credit, when we started out and the first PPP1 came in, the rule said, hey, you guys, if you apply for PPP1, you cannot do the employee retention credit. And most of my industry kind of ignored the employee retention credit, right or wrong, but we kind of ignored it because we couldn't do it because everybody was applying for PPP money. Well, the new back and said, wait a minute, now you can go back and use it for 2020. And so we go, well, okay, what is this darn? And what it allows for 2020 is you can get up to $5,000 per employee per year if you have eligible payroll. So an example of that would be if you had somebody who had 10 employees and they were paid at least $10,000 each, 10 employees, you'd be able to use half of that, which is $5,000 per employee. So you could get $50,000 back in this employee retention credit. And that's great news. And this is filed for on a 9 income tax. It's done on a payroll tax return. The key is you cannot use the same payroll for PPP as you use for the employee retention credit. Let me say that again. You cannot use the same payroll amounts for the PPP loan forgiveness as you can for the employee retention credit. So now we're looking back, that's 2020 rules. So now we move forward to 2021, and they change the rules again, of course, just to keep us on our toes. Well, for the first quarter of 2021, if you qualify, in the first quarter, you can do up to $7,000 per employee. So in my same example that I have with 10 employees who qualified for this, you could get $70,000 on quarter one, and you would file for that on your 941 for the first quarter. So that's another 70,000, and you can do the same thing for the second quarter. So that's another 70, that's $140,000 if you qualify in the first 2 quarters of the year of 2021, and that's separate from PPP. So again, you can use wages and health insurance to apply for this. You cannot use the same payroll expense as you did for PPP. So what we're emphasizing for folks is if you have not applied for forgiveness, we want to wait until the rules become clearer so we know what's going on and how this applies. And the way you qualify for this, there are 2 rules that are coming on with this. The first one is the easy one. If you had a 50% reduction in 2020 of your gross revenue, then that applies for you. You can do that. For 2021, it's only a 20% reduction in gross revenue. So just out of the gate, my brain says, well, a lot of our restaurants and bars, this might apply to as you're going through. The other part of the definition that this applies to you is if you are subject to a government shutdown or partial suspended business operation. That is the direct wording that we have right now. And the real question we're trying to find out is, what does that mean? From the seminars we've attended, it looks like if your restaurant or bar or motel was limited by capacity, even if your revenue is not down, you qualify for this. There's restaurants who have changed that because they have a lot of takeout, their revenue is even up. And the leaders of our profession are saying they may still qualify even in the revenue situation. So we're looking at that rule and trying to get more guidance. What it appears does not apply is if you have a business and the government said, okay, you have to stop because of PPP, everybody could go home, and they continued to work by Zoom, and they continued pretty much as before. It sounds like you would not qualify for this credit. But again, we're looking for clarity on this situation. Certainly, if you had a manufacturing or if some portion of your business was shut down for COVID testing or COVID, you had to have your employees isolated for that time period, this would probably apply. So those are the main things that I wanted to cover with this from a high point of view with that. And I want you to have a couple of takeaways from this presentation. And the detail is overwhelming to us, and we're not even talking income tax yet. And we just did a presentation to our staff on this employee retention credit, and everybody's going, what is this on top of tax season? It's crazy, and it is. But the things I would ask you to take away is, first of all, if you need PPP2, go ahead and apply for it. It's a great loan, even if you don't get it forgiven. It's not a bad loan with that at a low rate of interest. So I have clients who are calling in on that. I have farmers and ranchers that qualify for this, and their particular rules for farmers and ranchers is it's based on a reduction in gross revenue. We don't know the answer to that yet, how this is all going to work out. But we ask you, if you're going to apply for loan forgiveness, you wait just a little longer till the rules become clearer. We're getting mixed messages now on what qualifies. We know you have to have wages as part of that. We know that's a piece of it, but other qualifications include a lot of new things for PPP2 that we would like you to use for PPP2 and for PPP1 if you hadn't done it yet, because the rules have changed. So we want to use the minimum amount of payroll for loan forgiveness if you have that available, so that the rest of the payroll is available for this employee retention credit. And I think I'm going to leave it at that. You got a couple of handouts coming your way from the chamber. And I know we have one from the American Institute of Certified Public Accountants, the AICPA, and it's a 15 pages. And by the way, the 15 pages is just a summary. And so but it gives you details and places to go, and you'll see what we are looking at with that. I know Bank of Colorado has a piece they're sending out, and we have a piece that's kind of a summary of these slides that we are sending out. And if you're going to go for loan forgiveness, I think you really want to think about this. And if you have a chance of being eligible for the employee retention credit, I think you want to document very carefully what payroll you use for the PPP loan forgiveness. Because if you don't document that and set it up, it may not be available. John, you want to advance that last slide for me, please? And I wanted to also include this, just if we don't have enough rules and enough stuff changing, if you were bored, the state of Colorado also has a sales tax relief that's available for a lot of bars and restaurants. And this you apply for on your sales tax return. So now we've got some stuff that's coming through on sales tax, some stuff that's coming through on payroll tax, and some stuff that's coming through on income tax. And we're dealing with the SBA that has new rules for us. So don't get bored out there. But the sales tax relief applies for November, December of 2020 and January and February of 2021. Again, bars and restaurants can get up to a total of about $7,000 back, depending on what you paid in. But we just want you to be aware of that. And I will leave it at that.
Great. Thank you, Casey and John. And I know there's some questions in the chat. So as we have our next presenters from Bank of Colorado, give you guys some time to research some of the answers and look at those chat questions. And again, at the end, we'll come back and address all the questions that come in on the chat. So next coming up, just make sure I'm looking at my notes real quick. Oh, one note I made is always to have good relationships. And this is something I always talk about when I'm presenting at a starting your business workshop. Have the relationship with your banker, your CPA, an insurance professional, an attorney, marketing person, advisors for your business. Having that relationship before you need them is always so helpful. So we have Corey Dean and Elliot Fitz with Bank of Colorado, and I'll go ahead and turn it over to them and let them do their share screen and everything. And again, if you have questions, don't forget to put them in the chat and we'll address all questions at the end of the presentations. So Corey, Elliot, who's up?
All right. Well, thank you, Jack, and thank you, Casey and John. That was very informative. I hope one thing that everybody's realized through this presentation is that there's a lot changing. There's probably a lot more that's going to change. So as Jack mentioned, it's very important to have a relationship with your accountant, with your banker, with an attorney, with your insurance agent. Get ahead of that and just be in communication. That's going to be your best tool trying to navigate this. So with that being said, our goal is to try and simplify, if you are going to apply for PPP Round 2, try and make it as simple as possible for you and have the cleanest application so that it can get through the steps as easy as possible. So every bank is going to have a little bit different application. Bank of Colorado, if you got a first round draw with us, you can go online and we'll send you an email with a personalized link that will automatically fill in quite a bit of information for you. So should be a pretty easy process. Any kind of documentation you need, we can upload everything. But again, have those relationships with your bankers and your accountants, and talk with them about what their specific processes are. And if you're with us, we're happy to take your calls and answer those questions to get you going. And one caveat to that is please only be applying with one lender. One thing that we have seen that slows down the process immensely is when people go out and they kind of take the shotgun effect of, we're just going to apply everywhere to a number of different banks or online institutions and just see who can get it to us first. And what that does is it creates a lot of extra work for you. You got to fill out all those extra applications. And then from our side, once we get through the entire process, we get to the end and see that there's an error. And that's creating problems for us. So there's obviously an error for us, and now there's an error for your SBA application as well. So have those relationships. Just make sure you're talking to one bank, one person, and being in communication with them. And that's going to be the best way to go about it. For application, for documentation to support your application, Frederick Zink, I think, did a great job of kind of going through what we need. We will need 2 different categories for round 2, and that's going to be payroll documentation and revenue documentation. So for the payroll documentation, the easiest and simplest applications that we generally see are based around their 940. And I know Casey had talked about a 941 for the employee retention credit. We can accept those as well. So that's going to be important for both your accountant and for us. So very important to stay on top of your quarterly and annual tax returns. But to document payroll, we'll need 940 if you're agriculture, 943, or if you're a sole proprietor, independent contractor, we're going to go off your Schedule C. So have those ready, prepared, and again, be in contact with your CPAs, be in contact with your accountants. They are just a phenomenal resource for you through any of these processes. For revenue documentation, Frederick Zink touched on that you have to have 25% gross revenue or receipt reduction. And that has to be a 2019 to 2020 comparison. And you can either do that annually or quarterly. So for example, you can do Q1 2019 to Q1 2020. If you had a 25% reduction in gross receipts in those quarters, then you would qualify, or Q2 to Q2 and so on and so forth. That's going to be one of the main qualifications for PPP Round 2. Now that rule does not apply for PPP Round 1. So if you didn't get PPP Round 1 funding, that rule does not apply to you. And I encourage you to talk to your bankers and talk to your accountants to see if you qualify. And with that, I am going to turn it over to Corey Dean to talk about the funding timeline once you do get your application and the forgiveness.
Thanks, Elliot. Great to be here. Thanks, Jack, for getting everything put together for us, and everybody else for being here and taking the time out of your day. Elliot and I have been kind of on the ground floor here, processing applications for Draw 1 as well as Draw 2 or PPP2 and the forgiveness process. With all the changing rules, it is hard to kind of keep up with everything. I know Casey and those guys are really working hard to keep up with all the changes that's been made. But as far as kind of funding timeline for Draw 2, as Elliot mentioned, assuming we have all the documentation provided up front and a complete and accurate application, we can typically get the review process done in about a day. And again, that's assuming we have all the documentation. So be sure to take a look at what the questions are being asked throughout the application process. Once we get the application and get that submitted to the SBA, they then have about 3 to 4 days to make a decision and get us an approval or a decline. Once the approval comes through, the note and loan docs do need to be signed within 20 days. As a bank, we want to make sure we get these out as quickly as possible. once we do get the signed note in, and after the funding must be done within 10 days, typically we can get that turned around pretty quickly. You'll just want to make sure you communicate with us on what day works best for you. So everybody's favorite part now, we'll talk a little bit about forgiveness and touch on that a little bit. I know John kind of went through that, and kind of one thing to remember is when it comes to forgiveness, you want to make sure you speak with your accountant with the employee retention credit aspect of things. That's something that you definitely want to take into account if that's something you do qualify for. Prior to requesting forgiveness, definitely have a conversation with your accountant to see if you do qualify for that. With that being said, the SBA has provided guidance as 8 or 24 week covered period as well for this draw 2. What we've seen as far as the easiest and simplest way to request forgiveness with the least amount of documentation is to utilize a 24-week covered period utilizing payroll alone. Typically that payroll amount for a 24-week period will be well above your 2.5 or 3.5 month loan amount. Again, you want to make sure you speak to your accountant and kind of clarify whether or not you are qualified for that employee retention program. The covered period, what does this mean? It's basically the time in which the funds must be used in full. Typically, if you are able to do so, most of the time we've seen full forgiveness provided from the SBA. One of the guidance from the SBA is a minimum of 60% of the loan amount needs to be used for payroll. The other 40% you are able to use non-payroll expenses such as mortgage interest, rent, utilities. There are some other ones that John had mentioned in there that have come out for this new round and for forgiveness for the draw 1. So definitely work with your accountant on kind of finding out whether those are in fact qualified expenses. As John also mentioned, new forgiveness application. I believe this is the 4th forgiveness application that they've come out with. Try to make things a little bit more simple for everybody. But it's $150,000 and below. We're kind of calling it the simplified application right now, although there is already a simplified application out there. When looking at this $150,000 and below, no documentation is required for submission of your forgiveness. However, you are required to retain those documentations in the event that the SBA does want to take a closer look at things. Anything over 150 are still applicable for the other 3 forgiveness applications: the easy application, the simplified application, and the 3508. You might want to work with your accountant if you are over that $150,000 threshold to see which one might work best for you. But again, the simplified application for the 150 and under is basically a 1-pager, as John mentioned, certifying you utilize the funds properly. So I know there's a lot of moving parts in this, but you want to make sure that you do work with your accountant and keep the communication lines open so that you can get the most forgiven, and as well as keep in mind the employee retention program. So I think that's all we've got.
Okay. I was waiting for Elliot to jump in. Caught me there. Well, again, all this information, we are recording this, and we'll be forwarding information to everybody that's attending today. So one thing that I have learned through all the PPP and everything that's gone on too, it's okay to pause a little bit and wait. You know, pump the brakes sometime. I know a lot of times we want to dive right in and get that application in, and again, that's one thing we definitely have learned to pause a little bit, step back, and decide what the best approach is going to be. So next we have Mary Shepard, and Mary's great. She's with the Small Business Development Center, juggles many balls in the air. And I told her, I said, yeah, having you bat last, you can kind of take all of this because there's so much information and present and give us, new information as well as things that you've presented in the past. So with that, Mary, I'll turn it to you.
Thanks, Jack. Okay, so you should be able to see my screen, and I will let you know that this was a presentation that we did earlier. So a lot of this information has been covered. I will quickly roll through this and then get to some of the information that may be in addition to what you've already heard. So I'm Mary Shepard. I'm with the Southwest Colorado Small Business Development Center. We are a program of SBA. We exist in all 50 states. In the state of Colorado, we have 15 SBDC centers. Our center has been located here at Fort Lewis College School of Business for about 25 years. And we cover the 5 counties and 2 tribes of Southwest Colorado, and we provide no-cost consulting and no-cost or low-cost trainings and workshops. So that's who we are. Let me move through. This is some of our contact information. We can provide this to you, but feel free to reach out to us if you have any questions, any needs, want to meet with a consultant. We have a great team of consultants, including a former retired bank president and some really strong financials people. So while we're not CPAs, we will not give you tax advice. We can probably answer some basic questions. So this was our one that we did, and you have heard most of this information. So again, I'm going to kind of go through. One thing I wanted to clarify with Corey is that I believe that the second round PPP, so first round PPP is still 8 weeks or 24 weeks, you have to choose. But in second round PPP, the borrower can choose any period between 8 and 24 weeks. So if you want to apply for a 16-week period, that is your choice. So really strategizing on how you're going to use those funds and when you want them, when you'll be able to meet those numbers you need for full forgiveness. So keeping that in mind, I would also tell you in second round PPP, when you're calculating your loss, and maybe you already have realized this, but your PPP1 income does not count towards your gross receipts. So you don't count that in that quarter as far as revenue in that quarter. So if anybody had questions about that. So again, if you haven't applied for PPP, it's very similar to first round PPP. You have to have applied for, received, and spent. You don't have to have applied for forgiveness, your first PPP before you can apply for a second one. And so we're, I'm just going to scroll through this quickly because most of this. Okay, so there are some set asides for small businesses that are going to hopefully help us from running through this money as quickly as the first round did. Again, I think the fact that you will have to prove loss in 2020 over 2019 is also going to slow things down. The fact that businesses have to be 300 or fewer employees, some of those larger loans are not going to be out there. I will tell you that right before this event, I emailed my contact at the Denver office of SBA. So Frances Padilla is our district director for the state of Colorado, and she did send me some information. Totally nationally, they have already, as of January 24th, they had approved about 400,000 PPP loans for a total of about 35 billion. And that's 35 billion out of the 284 billion that's allocated for this. Average loan size this time is about 87,000. So very different from round one when we had some really big PPP loans. In the state of Colorado, they've had about 6,800 PPP loans approved for a total of about 664 million. There are some unresolved issues. This time around, SBA is using a different platform with the lenders, and I'm sure the bank can talk about that. There's been some unresolved borrower errors. Those should be corrected, or the bank should be able to go in there now and take a look at those. Because of that, there may be a little bit of a backlog. I've been having a dialogue back and forth with one business owner in the chat asking about timing of applying for PPP. I would never tell anyone to wait too long. We never know when there may be a rush on these funds, and once they're gone, they're gone. But, again, there isn't quite the same urgency, I think, as there was the first time that they put this program out. Do know that the banks do have caps on lending. So if you cannot find a local bank that is still doing PPP loans, and I think they're all still doing them now, let us know. There are some nonprofit lenders out there that we might be able to connect you with, and they tend to have access. They're using their funds slower, I think, than some of the banks. Okay. So we talked about some of the clarifications that happened, which were good news. for borrowers. Okay, so I know this is about PPP, but I wanted to throw a couple things out there. EIDL reopened as well. So EIDL is now open through December 31st of this year. They will not be awarding any more EIDL Advance grants to new borrowers, but anybody who is in a low, it turns out is low, not low moderate, but a low income track area. We have some of those, I believe, across this territory, and you received less than 10,000 on your EIDL Advance, they're going to be working to contact you to true you up to 10,000. So if you only got 1 or 2,000 and you are located in a low income track, you may be hearing from SBA to give you the balance of that 10,000, and you don't have to reapply for that. You can only have one EIDL loan per disaster. So if you've already gotten a COVID EIDL, you can't get another COVID EIDL. But if we have a drought, if we have a fire, if there are other disasters, it doesn't prevent you from getting a second one. This is also really exciting, and I don't know how many people know this. If you have a SBA core program grant, an 8A or a 540 loan, they're going to, if you already have one, they've been making some payments, and those are not deferred payments. They're actually making those payments on your behalf. They are doing that so that borrowers will get another 3 months, up to 5 months, depending on, you know, where you live. And any brand new borrower, so anybody who goes right now to and applies for an SBA loan and is that award funds between February 1st and September 30th, they will get their first 6 payments made. And that's important because a lot of businesses may not qualify for a second round PPP, or we have new startup businesses or businesses that want to grow, have an opportunity. There's some really good incentives out there for you to look to use SBA programs to borrow money. So if you have any questions about those, let us know. And then a lot of people have been asking me about the Shuttered Venue Act. So if you think you're going to qualify for a Shuttered Venue Operation Act, what I found out today is that today or tomorrow, they're going to be updating the eligibility. We should know more. Let me go back to that email. We're expecting updates today or tomorrow. They'll have another national webinar on that. So that you know ultimately your eligibility. It could be a better program for you than PPP if you qualify for it. If you had a first round PPP back in March or April, you know, under CARES Act, you can still get a shuttered venue grant. You cannot get a new PPP as of December 27th and still get shuttered venue. So it's a good idea to have a sense of which one is going to be better for your business. And don't panic. Again, the PPP money isn't on the verge of running out at this point. So you should have information and time to make that decision. We talked about these employee retention credits in a way that is much more thorough than I would have been able to cover it. Mostly what I want to say, and I'm going to stop sharing now, is that you have resources. So if you have any questions, I can put questions up. I get very quick answers, generally speaking, from SBA. So I'm happy to keep on top of them, keep asking them what's going on. And we have a great team of consultants that can help you either in the application process for any of these programs. So if you need help filling out the paperwork, getting your financial statements together, let us know. And then on the flip side, in the forgiveness application, we're happy to work with businesses. And then I would say, again, if you have anything else business related that's not related to disaster recovery, we are here. So we can consult with you on new business ideas or, you know, marketing or all kinds of things. And we've got some exciting, we just met yesterday to think about what we might want to do going forward. And I think what we might look at is a selling your business workshop or event, and then a buying a business, because we're seeing a lot of movement buying and selling of businesses. So that's something we might be working on coming up. And then, you know, just kind of coming out the other side of a disaster. I'd love to do something on what we've learned, what we can expect, trends, what's not going to change, you know, what's not going back to normal, and how our business is getting ready for that, you know, really more permanent pivot. So that's all I have to say, Jack. Thank you. And thanks for including us.
Well, I just want to echo, Mary, you've been a great colleague to work with, and the resources the SBDC offers are incredible. So, and thank you for that. I think this is the first time we've actually, you know, I'm looking at the time, we got plenty of time for questions. So I'm going to go down the list that have popped up in the chat. You guys should be able, everyone should be able to see these, but are receipts defined as cash or accrual? Who would like to field that one?
I will,
Casey?
Jack. Yeah, right now, my understanding, and you guys must realize this is a moving target, so we're learning as we go. But my understanding, it's the standard you use in your business. For most of my customers, I would think that's what they use on their tax returns if they're not audited financial statements. So for most of my folks, it's a standard you use. If you're a cash basis or if you're an accrual basis, that would be one thing to look at. And we're not sure, I'm not sure how that intertwines with your payroll, because payroll is usually reported totally on the cash basis if you're submitting a 940 or a 941. But it's your standard that you use for business, is my understanding.
Thank you. Another one,
yeah.
I keep hearing, oh, go ahead.
Oh, I was just going to say, I would agree with Casey on that one. It's reading the IFR just now when that question came up, it's your business standard. So that's the guidance we have right now.
Great. Another question, keep hearing, don't leave money on the table, kind of quotes, you guys can see this, but I wonder if that isn't the neighborly thing to do here. Is the second round a finite fund?
I'll take it if nobody else wants it. That's fine. Mary, I think you kind of answered that. Thank you with that, because I think there's still money there on the table. And I'm getting that reaction from clients of mine as well. Is they're worried about the funding runner out and the national deficit. And, you know, that's kind of a question for Congress. And my job is to give my clients the most information I can, let them make the decision they want to make. But we're getting that sentiment as well, is how much money are they going to send out and what's going on with that. And again, I define my job as give my clients all the information I can, and then they can make the decision on their own. But it's a good point.
Thank you. And the next question, I know, Mary, you answered Bill's question. Is there anything else anybody would like to add to Bill's question? Is there a source website to keep tabs on PPP fund drawdown rate? Maybe better to get the PPP loan in March so the ERC can be claimed this quarter and delay the start of the 24-week covered period. I know Mary answered that. Does anybody have anything they'd like to add to that?
I guess I'm the talkative one, Jack. Sorry.
No, you're always good for answers. Come on, Casey.
I saw that question pop up. You know, John and I have discussed that at length. And if somebody was applying for PPP2 and they were going to use it throughout 2021, then because the employee retention credit is available for only the first 2 quarters, that is something we would look at in a planning mode, is to use the first 2 quarters for the employee retention credit and then attempt to use the payroll after the end of June for the PPP loan forgiveness.
Great. And Casey, do you want to, I'm just, kidding you here. In assessing the employee retention credit, do you include the PPP loan in your income? I think that was answered, but.
The PPP loan is not in the loan forgiveness, the loan amount coming in is not included in income. And you can deduct the expenses, as Mary covered.
Great. And if we haven't spent the total of our first PPP loan, can we still apply for the second round? We answered that, but what do you recommend we do if we're in this position but want to maximize our loan amount? And again, never knew there would be a second round, so was being very careful with the first round, and I assume that's of spending those funds. And you can apply for the second round as well as other resources that have been talked about. Anything else anybody would like to add to that?
I can jump on that one. So one of the requirements for applying for the second round is that you spent, if you got a first round, is that you spent all of the funds for that. So my best advice would be to talk to your accountant, talk to your banker. These loans were set up to be 2.5 months of payroll, so with other qualified expenses. So probably need to sit down and take a really detailed look at how you've spent those funds, because in 24 weeks, most of the time, most people are able to use those funds. So I would just talk to your accountant, make sure that that is in fact true, and then work with your banker. And if if you truly didn't use it in those 24 weeks, you can still use it after the 24 weeks and then apply. But you do need to be sure that you used all the funds before you apply for round 2.
Thank you,
Could just
Ellie.
add something to that really quick. We get a lot of questions posed as, do you have to have had applied for forgiveness prior to applying for the second round of PPP? And the guidance from the SBA is you're not required to have applied for forgiveness prior to applying for round 2. So that's something to also keep in mind, as Casey mentioned, kind of with the employee retention credit.
And I want to add one thing to that, because it's PPP2. Remember, the deadline is the end of March. And I know we're at our situation, we're jumping into tax season, and it was like, holy smoke, we got to handle this in the middle. But it is, if you're going to apply right now under the current guidance, it is the end of March.
Great. Thank you for that reminder. When applying for PPP2, are we still required to maintain the same level of full-time employees as reported on our base payroll from 2019? As our business has declined, full-time employees have also declined.
I guess I can speak to that one as well. So that's, again, a pretty nuanced situation, and something you're really going to need to work with your accountant and your banker with, because it's a situation that we've seen where if people are going off of their 2019 payroll numbers, you want to be confident that you can use those funds within the 24 weeks so that you don't get reduced forgiveness. So if you're going off of your 2019 payroll numbers and FTE calculations, but you have reduced now in 2020, that may be a situation where it's going to be better to use 2020 FTE calculations and 2020 numbers. So you'll have to provide extra documentation to your accountant and to your banker, but our goal is to always make sure that you get as much forgiveness as possible. And if you're getting too big of a loan that you can't use all the funds within those 24 weeks, that could be a situation where you get reduced forgiveness. So I would just say, again, work with your accountant, work with your bankers, and talk through the specifics.
Great, thank you. Moving down the line, I read that the form 7200 had to be submitted for employee retention tax credit. I heard that here it was just on the monthly tax form. Casey.
I'll take that on. There are situations where it can be done on a 941 and on a 7200. And I'd have to go back and look. I don't have that at the tip of tongue. John, do you know that perchance?
It would be, if you are doing your quarterly tax return filing, you can claim it there. If you have already done that, I mean, you can claim the advanced credit on the form 7200. It could be both, in essence, depending on how you're doing your payroll returns. There's options of going back and amending the 941s also to take advantage of that credit. So there's more than one way to obtain that credit.
And on the EIDL Advance, what is considered to be the cutoff for low income status and gross or net?
They haven't put out the EIDL Advance guidelines on what low income is. I reached out to Region 9 when I originally thought it was low to moderate income, and they said that La Plata County usually qualifies for that, but now it's really very clearly low income. So I'll have to figure out what guidelines they're going to use on that. They haven't told us yet. And there was an earlier question about if we didn't apply for the EIDL last time, but got a PPP, can you now apply for EIDL? Yeah, absolutely. People in the past, it is a loan. EIDL is a loan and not a grant. There are no new EIDL Advance grants available, so it would just be a loan. and it is at 3.5% for up to 30 years. Again, it's got guidelines on how you can spend it. It's got to be used really as working capital. So, you know, if you're looking to make an investment or do something, you probably want to look at some of the other SBA loan products. But if you have not applied for an EIDL disaster loan under the COVID declaration, you can still apply for that through the end of this year. So again, I don't know, you know, what that's going to look like funding wise or how many applications we'll see on that, but I think there'll probably be plenty of funds in there for a while. So you might want to work on the PPP first if you are going to go that route, because it has the potential to be forgivable.
Thank you. From Connor, we are relatively new business. Our first payroll expense was on February 7th, 2020. How should I calculate my average payroll cost for the application? And second, how will we be looked at in terms of the reduction in revenue if we did not start receiving revenue until fourth quarter to 2019? I'm gonna say rock, paper, scissors. Who wants it?
I can at least speak to the reduction in revenue. It's going to be your revenue for the first quarter of 2020 in comparison to one of the remaining 3 quarters. You'll need to show a reduction of 25% revenue from quarter 1 when you were in business to quarter 2, 3, or 4. And the deadline that the SBA set out is you had to be in business at the latest by February 15th of 2020.
Elliot, if they have never applied for a PPP, they don't have to show that 25% reduction though, correct?
That's correct, yeah. And in that scenario, we'd be running through a first round PPP loan with them.
And then for the payroll calculation on that, I think I can speak to that. You can take a look at your 941s from 2020, all 4 quarters and average amount to get your monthly average payroll cost there for that.
And is there a deadline for applying for the 2020 employee retention tax credit? Says I saw on the website February 1st, and they're wondering, is that correct?
Jack, my understanding is it's applied for on a 941 or an amended 941. And my understanding is there is a 3-year statute on that. Again, I'm shooting out of the gate here. I think Eric from the payroll department is on. He might know more than I do, but I think that's how it is. And you have 3 years to file that.
Okay. And the other one for PPP round 2. Does your 24-week period start as soon as the funds are dispersed, or can you choose your 24-week period?
So I can talk to that one. As far as the 24-week period, that does begin on the date of disbursement of the loan. And Mary, thanks for correcting me on the covered period there. I guess to clarify, you must choose between any covered period between 8 and 24 weeks to utilize those funds. So it must be between 8 and 24 weeks, but you can choose any week within that period as to which you utilize all the funds.
Great. Well, I think I got through all of the questions. Again, we'll be sending out, we may have already received the information. We have recorded today's presentation. So again, I want to go back and thank, Bank of Colorado, Elliot and Corey. Thank you guys for being on this. John, Casey from Frederick Zing, thank you. And Mary from the SBDC. A lot of information. I alone just can't even keep up with the acronyms that keep getting thrown around. So it's very, very, very involved. And again, talk with your banker, have the relationship, talk to your CPA. And I just can't thank you guys enough for taking time out of your busy schedules to do this. Also, I want to let everyone know, especially in the restaurant industry, we are now below the 300, actually we're below 300 cases per 100,000. So we've been trending downward. If we can continue that trend, That's going to allow more capacity if you are a 5-star certified business. So if you want more information about that, you can go on the Chamber's website, durangobusiness.org, or swcoda.org, Southwest Colorado Disaster Assistance. More information about the 5-star program. So thank you guys again. I truly appreciate this, and a lot of information. Please reach out to the folks that can answer the questions. If you need help connecting to somebody that's presented, you can always reach out to me at the Chamber, jack@durangobusiness.org. And thank you again to Purgatory for helping make this possible at no charge. So I will say, somebody did put in the chat that they think I need all the forgiveness I can get. So if you guys can do that for me, I appreciate it very much. And with that, I want to tell everybody happy No Down. So today would have been Snow Down, but to, celebrate No Down, get out and do something fun in the snow over the weekend, and go ahead and dress crazy. I give you permission. So with that, we'll wrap up. Thank you, everybody. Have a great day. Be safe.
Thank you.